Hello and welcome to this RSM webinar. This event is a timely update to workforce cost webinars that we produced at the beginning of April. More information, changes and details about what you need in order to make a claim and to calculate the reclaim amount under the job retention scheme has recently been announced. So this webinar will give us the updates that have occurred and, where possible, the practical implications for making your furlough claims. The information being presented to you is correct as of the evening of April the 15th. And as before, as more information and guidance becomes available, it will be shared via the RSM Coronavirus Hub on our UK website. We are recording this webinar and it, along with the slides you're about to see, will be available to all who have registered for this event. In terms of housekeeping, please do mute your microphones so that we can reduce background distractions. And as we are all remote working, please do bear with us if any technical gremlins creep into the presentation. As with all our webinars, and by the way, next week's event will be on tax-free claims and incentives during coronavirus, we do want this event to be interactive with your questions. And as you can see on the screen, please do use the Q&A function, and our presenters will attempt to answer a selection of your questions, time permitting. So if you could use that box that's being highlighted with the red arrow as opposed to the chat box, that would be fantastic. In terms of our presenters today, who are all from our People Advisory Services team, let me just quickly introduce everyone. Firstly, we have Carolyn Brown. Carolyn heads up our employment legal team at RSM and is a specialist employment relationships and dispute solicitor. Susan Ball, who is a specialist in advisory and compliance taxes related to people costs and mitigating people tax risks and costs. And finally, Steve Sweetlove, who specializes in payroll and HR advisory services and heads up the HR and payroll advisory team at RSM. And my name is Simon Hart, and I'm your host during today's event. So let's get right into this, and let me hand over to Carolyn.
Thanks, Simon. Good morning, everybody. I'm going to give you a brief overview of the coronavirus job retention scheme with a focus, I hope, on what's changed since we did our webinars a couple of weeks ago. So let's look now at what it is specifically and what it's designed for. Because we've had various iterations of this, the current position is that it is designed to support employers who cannot maintain their current workforce because their operations have been severely affected by coronavirus, and it's to help them to retain those employees, as well as being to protect the UK economy. There is a recognition, however, now that different businesses will face differing impacts from the coronavirus. It introduces a new concept of furloughed employee, which was fleshed out in more detail yesterday afternoon. And whilst it was announced on the 20th of March, it's intended to be operational at some point between the 20th and the 30th of April. More about that in a moment. Effectively, it's for employers to apply for grants from HMRC for their staff wages cost. And that's the cost for the period from the 1st of March to the 31st of May 2020, although it may be extended. We don't yet know whether it will be. So turning now to who can claim. This has been expanded a little bit. We now have clarity that it's any entity who can claim, including non-UK entities, those with a UK payroll. It also includes individuals, and it does include businesses of administration and charities, as well as recruitment agencies. But they now, we have clarity that they must have a PAYE payroll scheme registered on HMRC's real-time information, the RTI system for PAYE, on the 19th of March 2020. They must be enrolled for PAYE online, and they must have a UK bank account. So moving on now, let's look at the new concept of furloughed employees. Please bear with us if some people on the webinar consider this is all new information. The reason you think that is that it is all new information as of yesterday, quite a lot of this. So the concept of furloughed employees was fleshed out yesterday afternoon. And it's really important to have a look at these criteria. It's an employee who's been instructed by the employer to cease all work in relation to their employment. A period for which the employee has to cease or will have ceased all work is to be 21 calendar days or more, which means 3 weeks. It doesn't mean 21 working days. It's 21 calendar days, 3 weeks. So that's the same. But we've got some differences and some clarity in relation to those who might have been on an unpaid sabbatical, for those who might have been being paid SSP. And also it's important that we've also had clarification that ceasing all work means not just for their employer, but otherwise indirectly for their employer or for any linked entity with their employer. That instruction to cease work has to have been given by reason of circumstances arising as a result of coronavirus or the coronavirus disease, and the employer and the employee have agreed in writing that the employee will cease all work in relation to their employment. That agreement can be by email. However, training activities, which are both directly relevant to an employee's employment and agreed between the employer and the employee in advance of being undertaken, can be disregarded as work, and also work by a company director to fulfill a statutory duty relating to filing the company's accounts or providing other information relating to the administration of the company can be disregarded as work. Again, quite a narrow formulation. So let's look now at who employers can claim for specifically under this scheme. So they can claim for furloughed employees who are on the claiming employer's payroll as at the 19th of March. That is a change yesterday. The date has changed to the 19th of March. And it's those that were notified to HMRC on the RTI submission on or before the 19th of March. That then becomes a qualifying PAYE. It includes foreign nationals, employees, workers, office holders, plus those joining as to-be transferred and payroll succession cohorts. It's those on any type of contract, full-time, part-time employees, agency contracts, those on flexible 0 hours contracts. And there's also the ability for people to be rehired according to certain criteria, which we've put on the slide. Again, we've now had clarity that apprentices, office holders, including directors, salaried directors, are covered, as are those on the personal services company, provided they qualify, as well as salaried members of limited liability partnerships. And we've also had specific clarity that workers are covered, but not the self-employed or off payroll. They have their own self-employed income scheme. So turning now to the qualifying costs elements that can be claimed. These are 80% of the furloughed employee's usual monthly wages, and that is in the latest salary period ending on or before the 19th of March, up to a maximum of £2,500 per month per employee, plus employer's national insurance contribution and minimum automatic enrolment pension contributions of 3%, apprenticeship levy, student loans not covered. So these regular payments that you can include in the reference salary do include payments that employers are obliged to pay to their employees, such as wages, past overtime, fees and compulsory commission payments. But those regular payments do not include discretionary bonuses, including tips and discretionary commission payments, and non-cash payments such as vouchers. With regard to salary sacrifice schemes, including those for pension contributions, that reduces an employee's taxable pay. They should not be included in the claim reference salary. And if an employee receives non-monetary benefits, including benefits in kind, for example, a company car, this should not be included in the wages claimed under this scheme. Claims are made using the amounts in payroll, either shortly before or during running payroll. So turning now to more specifics about the reference salary for different categories. First of all, for salaried employees, who are called fixed rate employees, you take the employee's regular salary or wages before tax in their last pay period prior to the 19th of March 2020, and you use that to calculate the 80% figure. For variable pay employees, the employer takes the higher of the actual amount paid to the employee in the corresponding calendar period in the previous year, or the average monthly or daily amount paid in the 2019-2020 tax year. And for employees who don't have 12-month service, it's the average weekly or monthly earnings since joining. For new joiners in February, it's pro rata earnings, but no claim can be made for those who joined the payroll after the 19th of March this year. Important, I think, before we get on to how you make the claim, to remember that HMRC may well wish to audit the claim. We understand that if they have reason to suspect a claim is not valid, and they have that reason before they pay it, they won't pay it. And if they have already paid the claim and they find it's not due, then they could recover the funds, and dependent on the behaviour, they can consider taking criminal proceedings. So you should keep records for at least 6 years, including keeping the furlough document for 5 years. And during an audit, they could request the detailed calculations. They could interview employees in person as to what they were doing during the relevant period. They can request those written agreements evidencing the employee's consent to being furloughed. They could also look at external data sources such as social media accounts, review physical email records, examine payroll records and audit pay changes, including amended RTI submissions. And they can also rely on the whistleblowers line, which they've set up, employees' own reports of non-compliant employers. So turning now to the timeline, which has been, as you can see, a little bit frenetic. The date from which claims can be made to is the 1st of March, by which I mean if the employee was not working at that date, you can claim back to then. And when you make your first claim, you can claim for the period back to the 1st of March, but clearly the employee must not have been working. And we do know that the key date for when they're not working is when they were sent home and they stopped work, rather than when the agreement was made with them or signed with them. We also know that the 19th of March is a key date, and that was the date immediately before the scheme was announced, and that the claiming employer must have a UK payroll, and the employees for which they're claiming must be on that payroll. And you'll see a number of different versions of the scheme, which we've had, guidance from ACAS, but the key date we're working towards is the opening of this portal. And we've had various indications over the last 24 hours as to when it will open. It will open at some point between the 20th and the 30th of April. We have variously been told that it will open on the 20th, it will open in the week of the 20th, it will open by the end of the month. So therefore, it will certainly not open before the 20th, but whether it will be open on that day, still not known. Claims can be made from when it is open. They can be made in relation to the period up to the 31st of May, but as I said earlier, we do not know if there will be an extension. So the scheme can be used at any time between Sunday the 1st of March and Sunday the 31st of May, which is 13 working weeks. The minimum furlough claim period is 3 consecutive weeks. There appear to be no restrictions on the frequency of claims, although it is expected that claims will be made on or around the preparation of payroll. We've been told that the claims will be paid by BACS into the UK bank account within, we think, 6 working days. So we'll now pass over to, I think, Susan, who's going to take us through how to make a claim.
Thank you, Carolyn. So just to recap, we expect the portal to open any time from Monday onwards. Once you've submitted a claim, unless HMRC have reason to believe that there is a problem with the claim, it will be paid within 6 days. And obviously, in relation to your first claim, that might be for periods going back to the 1st of March, but in future, you can claim either shortly before or during the running of your payroll process. So how do you make a claim for reimbursement? Well, you'll need a certain amount of information in order to do that. You'll need your pay-as-you-earn reference number, obviously the employees you are going to be furloughing, details, the claim period, the amount that you're going to claim. So you need to actually calculate this. That's the gross amount of pay, employer's national insurance and pension, your bank account details, contact name and phone number, and the national insurance numbers of those individuals who you are going to be furloughing, and or payroll information details such as works numbers or payroll references. You will also need a pay-as-you-earn reference number, your self-assessment reference number or corporation tax reference number. So how do you submit? Well, it's become apparent in the last day that in order to submit, you need to either have an upload of a file for those where you are furloughing and claiming for more than 100 members of staff, or if it's fewer, you are going to have to type the information into the HMRC system on an individual by individual basis. What is the process? Well, just to recap, before we go on to talk about some examples, you will need to be able to identify qualifying furlough days. Now, remember what Carolyn said at the beginning about what you need in order to make sure that you have qualifying furlough days. You will then need to select the claim period so you can tell HMRC the period you are making a claim for, whether it's going to be back to the 1st of March or some other date, and then obviously in future up to the date the scheme closes, which at the moment we believe to be the 31st of May. Then you need to identify the payments made or to be made for the claim period. Step 4, then identify the furlough employees who have been paid in that period. Remember, of course, that this must be a period of 21 days or more. So at the time you make the claim, you must expect the furlough period to be for at least 21 days if it hasn't been already. Step 5, you calculate what the gross pay grant per employee is. We're going to come on and explain in more detail how you do that, but effectively this is where you are calculating the pay which is the qualifying pay or reference pay for the purposes of the furlough grant. So the maximum being the 80% of pay or $2,500 per month. Then you will need to calculate what the employer's national insurance is per employee, and you need to take into account the secondary thresholds. So obviously that will depend on whether the person's weekly or monthly paid. Step 7 is then that you calculate the automatic enrolment pension contributions. And in this case, it is only the 3% that HMRC will reimburse. And again, you need to take into account lower level of qualifying earnings. So even if you pay more, the amount of the furlough claim will only be for 3%. You also need to actually have national insurance contributions in that particular period. So for some people, you may not actually have any national insurance. You can only claim where there is actually national insurance due. Step 8, you will need to effectively sum all of those up and explain to HMRC what amount of total grant you're actually claiming. So can you submit the claim or can your agent submit the claim? Well, an agent can submit the claim if they are authorised to operate pay-as-you-earn for you. Now, many payroll agents, for example, are only actually authorised just to send RTI returns in, and that is not sufficient. They will not be able to make a claim for you. They have to have full authorisation rights. So if your agent doesn't currently have this for you and you want to obtain it so you're able to make a claim, you need to register for HMRC's pay-as-you-earn online service. In order to do that, if you're not already set up in some shape or form, you will need your pay-as-you-earn reference number, and you will need to log on to the on-account services. You'll need to select the option to enroll and enter your details. If you haven't had an account before, then the normal process is that you will get a letter with authorization codes sent to the business address. So you will need to make sure somebody can pick that up for you. If, however, you are already registered for some form of online services, so perhaps for corporation tax, you may be able to add the pay-as-you-earn option onto your authorization you currently have using the codes you currently have. And in this particular case, the process should be quicker. And if an activation code is needed and you have already provided contact details in your original activation, then it is likely that that will be sent to you by email. So in order to work out how much you can actually claim, it is important to understand some clear terminology. What is a qualifying furlough day? Well, we've talked about that before. Obviously, it has to be in a run of 21 days. What is the pay period for the payment? What is the daily maximum amounts, or weekly or monthly? We've put the daily ones in here. We will come on to talk about the maximum monthly, which we have already, of the 2,500, and also the weekly as we go through some examples. And also, how do you actually work these numbers out when you're looking at how to calculate for periods when you need to take into account variable employees' pay for 2019-20? So now I'm going to hand over to Steve to talk about some examples.
Thank you, Susan, and good morning, everybody. As Susan said, I'm going to take us through some examples, and I've tried to, on the heading slides, indicate where those examples have come from, because I appreciate, as Carolyn has mentioned, we've had quite a lot of guidance from separate areas. So if those of you have been tuning into the various updates coming in from those sources, then this might help provide you with an indication of where they've come from. So taking our first one, these are from the HMRC webinar, if anybody did dial in yesterday. So just to sort of bring some consistencies of what we're talking about. So in this employee, if we take the relevant information out of the slide, the employee's been working for 4 years. So that's the first thing for us to make reference to, in that we're going to be looking at a whole year's period, because they haven't started in the last 12 months. Pay fluctuates each month, so therefore we are not looking at a fixed salaried worker, we're looking at a variable, and that's the reason why we're going to look at the average monthly earnings. If the person was a fixed pay, as has been mentioned previous in the webinar, we won't be looking at any average, because we'll just be looking at the last pay period in advance or prior to the 19th of March. But in this case, average pay worker, so we're looking at the 1920 tax year, or, as has been mentioned, same pay in the corresponding period last year. So if the average is £900 per month, you will always be looking each month, and that's the key as we go through these slides, each period will have different reference for an average paid employee, because you're always looking at what's higher, the average or the same corresponding period last year. For monthly, maybe that won't be too bad, because we might only be looking at March, April and May, assuming that the scheme doesn't get extended. But weekly, you might be having to do that 13 times. And because of fluctuations of pay, it's very likely that the pay that you'll be able to claim will be different for each period. So moving on to claim 2, really the point here, again, this employee's been around for a long time. It's actually a director of the company. So what this is looking to pull out on the slide, again, there's average earnings, so we're looking at the average for the year. What we're not including is a dividend. So we're just looking at the pay, as has been mentioned before, that's been paid via the payroll. That's the reference pay that we're going to be using to calculate any claim. So that's what we're looking to do there. But again, it's a variable paid employee, so each period you're looking at the average versus the same corresponding period last year, and taking the higher of those amounts. So moving through then in terms of calculating some reference pay, I've tried to go easy on the numbers here in terms of breaking this down every time. What but for no other reason than to avoid duplication, because otherwise we'd on every slide be talking about how to calculate NI and pension and the like. So try to keep it relevant to each slide. As we move through, there's 2 examples on this page. The first one being a joiner in February of 2020. So all we're really trying to say here is that if an employer, a fixed pay employee, and if they joined in February, whether it's fixed or variable, you are looking at what the salary would have been if they'd have worked for the whole month. So a joiner on the 17th of February, when you paid in February, you would have prorated that salary. So we're looking at what they would have received. Whilst on this one, and then I'm sure it will. I've already seen it coming up on some of the questions, and it is around that person started in February. They would have needed to have been paid in February to be eligible. If the 17th of Feb missed the cutoff, and I will reiterate this a few times, if they missed the cutoff and therefore they wasn't submitted on RTI in February, as they get paid the last working day of the month here by the looks of it, they aren't going to have been paid in March before the 19th of March. So therefore, that they might not, well, they wouldn't be eligible if they hadn't been submitted by RTI. But let's say in this case they were submitted on the February payroll, then that's the 2083 is what we'd be using. The bottom example here is where we are covering another kind of frequently asked question that we're hearing from our clients: salary sacrifice and things like car allowance. Well, the salary sacrifice, as Carolyn had mentioned, should be excluded, whereas the car allowance is a regular contractual amount of pay, so should be included. I mean, in this particular case, neither of those are going to have a bearing on the grant pay, because the salary was already going to be above the cap when you reduce it down to the $2,500 a month. But the principle there is that the salary sacrifice out and the car allowance in. The example for Mr. C on the next slide is now bringing us into a variable paid employee, and the relevant point here is that the employee receives contractual commission. So the contractual commission, and rather than discretionary, is going to mean that it will be included. And the point being here is that the bottom of the slide here is bringing this concept to life of that you are having to review each period. This is a weekly paid employee. The average for the 2019-20 tax year was £700 per week. But when we go back and look at the actual pay in week 51 of 2018-19, so that would have been in week 51, which was in March 2019, and the employee was paid £800, whereas in the week 52, they were only paid £650. The example shows that the reference for week 51 is 800. The pay in week 51 in March 2019 was more than the average. But when we moved to week 52, the average was more than the pay in week 52 in March 19. So therefore, it's the average that gets paid. So that's the real key that I'm kind of drawing your attention to there is that there will be the requirement to calculate that reference pay each period for variable paid employees. So the next slide, apologies in advance, is where it starts to get as complicated as it gets, and the guidance comes from a set of notes that were provided to software developers, and reference that these would be the same calculations used in the HMRC calculator, which is due to be released some point next week. And that guidance did note that this, as of the 9th of April, it was still in test. So the system was still in test, and therefore, as everything else, it comes with a caveat that it might be subject to change. But I would say that as of 15 minutes ago, when I started speaking, there had been no update since the 9th of April. So as far as we're concerned, this is what we're going on at the moment. So how do you calculate the grant pay? So that these calcs, and as I say, they're pretty technical, because they'll be going into the software system that the HMRC calculator uses and software developers would be using. But what we're looking at doing is 3 scenarios, and in most cases it will only, as I say, don't worry too much. In most cases, I'll draw attention to where it won't, but in most cases it will be as we've discussed so far. But what the number one is trying to do here is to look at the total pay for a period. When the furlough covers the whole period, then it will be the same as number 3 anyway. And number 3 is the one that we're looking at most, everything that we've talked about so far, is you take 80% of the period reference pay, multiply that by the number of qualifying days. So when it's a full period, all this is doing is just making sure that you're not overclaiming by looking at the total pay, the maximum, which is the $2,500 per month, or 576 a week, or the calculation is whichever is the lower of the 3. So if I haven't lost you yet, it will become apparent. So bear with me. We move on to the next slide. This just says the same thing for monthly. Thing to draw attention to here is that April has 30 days. Obviously, May will have 31 when we come to it, and if you're back claiming for March, that's 31 as well. So the main point here is to keep an eye on the denominator. And for monthly pay, I think the calculation type 1 is going to come into play more, because there's much more chance of somebody being off on furlough for part of the month, but then working normally for the other part of the month. So that's So drawing attention to number 1, all we're saying there is it's the total pay in the month that's relevant there. Some of that might be the normal hours versus the ones that are on furlough. So let's we'll bring that to life in a minute. So calculating NIC and pensions claim. So the thresholds are applied to the grant. That's the first thing I would say. We've had quite a few questions, which is to say, well, for a part month, if my employee was paid their normal pay for the first half of the month, then they went on to furlough, would the thresholds have already been exceeded in the normal pay at the beginning of the month? Well, and when we had our initial guidance, it was a point that we pondered quite a lot, because we was kind of thinking, well, where do you apply the threshold to, the beginning of the month, the end of the month? Well, that's been clarified. It's in the revenue's favour in terms of the claim, because the threshold will be applied to the claim. So whether that's at the beginning of the month or at the end of the month, which will become more relevant, hopefully, when people start to come back into the working environment. But the threshold will always be applied to the claim. So depending on whether it's monthly or a shorter period, weekly, 4 weekly, 2 weekly, you'd apply the secondary employer's NI thresholds to the amount of the claim and then times it by 13.8%. Of course, no claim is available if there is no employer's national insurance due. So the categories are on the screen there, the under 21s, apprentices being most common, but also anyone that are on category X or category Z. The pension, a similar type of process, only available if the employee is opted in. And again, that might not be as straightforward as you'd think. If we sort of thought about our February starter, well, do you run postponement? And that will come out a bit in a minute. But do you run postponement? Has the employee actually have they opted out because even on their furlough pay they don't want to contribute anymore? They can't afford to contribute. So if they are opted into the scheme and they haven't opted out either prior to their going on furlough or since, then you can claim. But the same principle applies. Take the earnings minus the lower qualifying earnings, and then it's the maximum of the 3%. And that's written down the 3%. So if your scheme is a 4% scheme or whatever, then you are only claiming up to the 3%. I mentioned the February example here. So this is where it's bringing into play those 3 types of calculations. So I'll take these through relatively slowly. You might recognise this scenario from before. So we've already worked out that this employee started mid-Feb. So if they hadn't have started mid-Feb, their normal monthly pay would be 2083. That's the reference. But note that they were furloughed mid-month, so 6th of April. So from the 1st to the 5th of April, the employee is going to be paid as normal. The example that I've used here, the 284, is from a common calculation method, which is the working days in the period. There are 22 working days in April, and I've particularly chosen 20 working days rather than calendar days because that's how many employers use that. But it's also a case of, well, it doesn't really matter how you pay for those first. The non-furlough isn't in this guidance, but once you have decided what you're going to pay, it does become apparent. The 284 in the bracket is the pay from the 1st to the 5th, 3 working days, and the 1st, the 2nd, and the 3rd of April would have been paid as normal. Then using the calculation, which is actually the same as number 3, 80% of the referenceable pay, the 2083, multiplied by 25 days of furlough, divided by 30 days in the month gives you 1389. So that would be the amount of pay you might think under 80% that you're going to pay your employee. But then note back to number 1, once you take the 284 plus the 1389 and run that through this calculation, you divide by 25 times, divide by 30 times by 25, you get 1394. In this case, number 1 scenario is irrelevant because you're taking the lowest of those numbers, so you come back to number 3. I've mentioned at the beginning, in most of these scenarios, it's just as we've always known it. It's my next slide where I'll show it. It's different. The bottom of the slide suggests, well, on the 1389, this is the NI that you claim, this is the pension you claim, providing that Mr. A hasn't opted out. So moving forward to the calculation for an employee who started midway through the year. So again, they're variable paid employee. By definition, they're not fixed, so they're variable. But you don't have a full 2019-20 tax year. You take the total pay in that tax year up until the last period prior to them being furloughed. That's a point to note, because if the employee was furloughed in March, for example, then you wouldn't be calculating the average on already reduced pay. So you would take it until the end of the first period, the last period that they were prior to they were furloughed. But in this case, that they were furloughed after the 31st of March. So it's just simply the amount they earn in the tax year divided by the number of calendar days between their start date and the end of the tax year. And in this case, so just go back to the previous slide, if I may, because I just want to draw attention to 1 and 3 would be exactly the same there, because for a full period. So so again, the bold is here is the lower of the 3 calculations. And then the last example, this is where I say I mentioned that number 1 will come into play. An hourly paid employee, so variable paid. In the 1920 tax year, they worked a total of 1,800 hours. So taking an average, we get to £39.44 per day. In April 2019, he worked 100 hours. So we get that that average was £26.67. So that's the first thing we do for a variable employee. We check the average versus what they were paid same period last year, and in this case, great, it's the average. So we carried the 39.44 forward. But then this is the bit I'll sort of take through slower. Because Mr. S was furloughed on the 16th of April, between the 1st and the 15th, he was actually working. So he hadn't been sent home. So picking up on Carolyn's point, if they'd been sent home to not work anymore any earlier than the 16th, then that would have been the furlough date. But in this case, the last shift that Mr. S did was on the 15th, so he went on to furlough on the 16th. But because the organisation was already being affected, my assumption, the hours due at the beginning of the month were low. It wasn't very busy, didn't work very many hours. So that pay was only 20 hours. So 20 times the £8 is going to give me 160. So in the bracket of example 1, I've got £160 normal pay. And I'm going to calculate the 15 days at my £39.44. I get to 473.28. When I multiply that by the total number of furlough days divided by the total number of days in the period, that is bringing me a lower number than calculation methods 2 and 3. So that would be the maximum claimable value. And that's the one that, as I say, the only place I've seen that is in the developer notes that come through on the 9th of April. We haven't seen anything referring to this effectively protection to make sure that those employees who had very low pay at the beginning of the month aren't going to get claimed for a high amount. But we just needed to draw that to the attention because, as I say, the latest information we've been told is this is the calculation that the HMRC calculator is going to use. So we're just being advising extra caution. We don't want anyone to get caught out with overclaiming or effectively working out pay for employees that you're going to pay and therefore not be able to claim back. Sorry for the complexity, but I hope that was useful, and I'll pass you back to Simon.
Thanks, Steve. I think it's just worth saying, the complexity of all of this. It's all been a very moving target, and it's fair to say that the team have been working late into the night and early this morning to try and work those calculations through. So thanks very much to the 3 of you. I mean, in terms of the support that RSM is giving to the clients and the middle market, you can see that on screen, some of the things that we've been doing to support you all with these type of issues. I just want to flag particularly at the bottom there that we've developed our own RSM software to calculate the furlough payment claims from your payroll data in a format that actually works with the government's portal. So please get in touch with us if you need more details on that going forward. I think we should just move on to some questions now. I mean, there's been literally hundreds of questions coming in, so apologies in advance if we don't get round to your specific question in the next 20 minutes. So let's get straight off with one of them. here we go. I think let's start with this one. It's all about the dates. Does the change in the date from the 28th of February to the 19th of March resolve the issue of monthly paid employees who are not on the payroll on the 28th of February? So there's a few questions around this one. I think, Steve, this one will be for you. But there's another one saying, if we had an employee who started early March, obviously not on the February payroll, when they submitted via the RTI on the 19th of March, will those type of people qualify?
Yeah, I'll pick that one up, Simon. Yeah, and you, the second question probably touches on a little bit of how this might be seen as to be unfair. But the first question is, does the change of from 28th to the 19th affect people who started on the 28th? If it's a monthly payroll, maybe not. I touched upon this with my example before. If you pay the last working day of the month, the point is if you wasn't on the payroll at the 28th of February, you're not going to have been on it on the 19th of March because your next payroll is the 28th of March. However, if you're on a weekly paid employee, you might have started as late as the 8th of March or 10th of March and still got paid on a weekly payroll before the 19th of March. So I think whilst the press is saying that thousands more will be eligible, it's only going to be those who are on a more frequent payroll who were, and they might have started significantly later, that are going to be included on an RTI. But those who, just by changing the date, that is not going to bring as many people as into play as we maybe thought about originally.
Okay, thanks for that. I mean, what about issues for employers taking staff back on their payroll after they've left the job, perhaps to go somewhere else? I mean, there's questions around also notice periods. If we rehire someone and they'd worked their notice previously, does that notice period reset?
Yeah, and that has been clarified in a number of in a number of the one, and Carolyn might want to touch on some of the complexities around rescinding notice and the like. But provision has been made for people to be rehired so that to try and reduce the number of people that were in limbo. So if they were on the RTI, then there are options there.
Yeah, thank you, Steve. Yes, I would suggest that this is not done without people thinking through its impact, because if people are immediately rehired, then they will have continuity of employment. Clearly need, and we've had this raised in some of the questions, to consider the reason that people left in the first place, or perhaps they were dismissed for poor performance. Is that someone that you really want back in your business? If things don't go well and you have to make redundancies and they've come back into the business, then they'll have to be made redundant with the redundancy cost. They will be returned to the business, and therefore, yes, they would be entitled to notice again. Therefore, I think those that do choose to do this, perhaps for benevolent reasons, will need to make sure they've got a very clear fixed-term contract in place, which will seek to mitigate some of these obligations. And also bear in mind, something changed on the 6th of April in relation to allowing continuity of employment. And it used to be that if there was a gap between employment of 1 week, that broke continuity. That changed to 4 weeks, which is likely, therefore, people will have those rights restored. So lots of care there for that taken on.
I mean, I suppose it's not directly linked with notice periods, but there are some questions. We had it in the webinars last time around, particularly with directors who have been put on furlough, and also key members of staff in terms of what they can and cannot do when they're on furlough. Can they do payroll? Can they do VAT returns? Can they approve invoices? What's the view on all of that good stuff?
So, hi, I'll pick that up as well, if I may. We had the draft legislation yesterday, and it was made very clear that a company director can undertake work to fulfil a statutory duty, but that's as far as it goes. So that's things like filing the company's accounts, providing information regarding the administration of the company itself. I think that means that the corporate entity, not the business. So I'm afraid I think that those other activities they would be working, which is why it's really very difficult to furlough company directors, because there is still work to be done, not least in managing the staff.
Yeah, and I guess it is, yes, and taking that point, it's also going to be very difficult to furlough some of the accounts teams, some of the invoice approvers, etc., even if they could work from home. Okay. There's questions here on the portal itself, and I know we don't actually know because we haven't actually seen it yet, although some of the guidance has come out, as Steve mentioned. What help can businesses get with these claims via the portal itself, especially if we have furloughed the staff that would normally do the calculations? Steve, can you shed any light on that?
Yeah, I can. I mean, Susan touched upon what agents can and can't do. If an agent has full authority, which is granted via a form called a 64.8, then the agent will certainly be able to help there. I mean, you mentioned on how RSM are able to help. Well, we're able to help with the calculation tool that we've developed. We're also able to help with submitting claims in some cases, or certainly working with anybody who is still in post to help submit that claim. I think it comes back to it's been touched upon by Carolyn and Susan about that the organisation is going to have to be registered for PAYE online. That's the first point. So having access to the portal in the very first place. But there are a number of ways that we can help an employer get their claim lodged.
Okay. And any idea how long the portal is going to stay open after the 31st of May period?
I suppose yeah, I'll answer that one as well. No indication as yet, and in some respects, no indication on whether the 31st of May will get extended or not. So at the moment, we're working towards the scheme is only available to the 31st of May, but obviously on other topics, we're expecting to hear something today, something ministerial around how long will the current social distancing measures last, etc. So 31st of May is only 6 weeks away now, isn't it? Will the scheme extend? We just don't know.
Yep. Okay. Let's talk about employee communications here. There's a question here. I see the terms of communication to the employee. We have moved from the initial inquiry to notify them of furlough to now saying that there has to be a written agreement between us, the employer, and the furloughed member of staff. So can employers assume that if an employees are staying at home now, they've actually agreed to this form of agreement? Okay, Carolyn, that sounds very legal to me.
Yeah, so this is a bit of a change, and it's giving some people concern. I've seen that in the question thread, because we've now got legislation which says that we need this written agreement. So we've got people who may have sent staff home, just notifying them they were on furlough. It is now required that there is an agreement to be on furlough and to do no work at all for the employer. We've had confirmation that can be an agreement by email, so that helps a lot. We have already had some litigation in this area, and we had some clarity there as to whether if an employer has notified employees and effectively said, let us know if you don't agree, but they haven't responded, whether that could be assumed or deemed agreement. In that case, the judge said that there hadn't been enough time which had elapsed between those events for it to be assumed there was deemed agreement. Many lawyers think it could be structured in that way, and it will very much depend on the communications that have already been sent. So wise course must be to tidy up that communication, make sure that it's clear so that the audit trail is tight. The other thing that's come out in relation to formalities is with regard to the ability to undertake training during furlough. It's been known for some while that could be done, was encouraged, and has to be paid for at national minimum wage rates at least. But now we've seen that training activities have to be directly relevant to the employee's employment, and they have to be agreed between the employer and the employee in advance of being undertaken for them to be disregarded as work. So I think there's another documentation process that needs to be done there in relation to any requests to undertake training.
Yeah, thanks for that. I mean, the email bit is quite interesting. There's been a few related questions which I'm trying to kind of amend to fit into this topic. But if we furloughed people in a rush, in haste at the beginning of the announcements, you've said that emails are an acceptable form of communication, but I assume the key is what you're actually saying in that email, because another question was, do we need to have individual agreements done retrospective administratively. So I guess it's a question: what was said in the emails and what needs to be said in those emails?
Yes, and we've had clients who said, "Well, look, tell me what those people need to respond to me in their email, because otherwise I'll just get something like, okay, fine, and will that be able to be an agreement?" So the wise indication, I think, is employers communicating and saying to their employees, "Please respond if you agree. Please respond by email and say this," and giving them the words they require, so they've got some clarity that there is a clear agreement.
Okay, thank you for that. Okay, a slightly left field topic in relation to home working as an alternative to furloughing. Susan, this is for you, I think. Who is responsible for meeting the costs associated with home working?
Well, that very much depends on the employer, really. If they wish to make a contribution towards, obviously, somebody's home working costs, then potentially they're able to do so. We do have an HMRC, effectively a rate that you can pay for people, and they have confirmed that for people who are home working because of coronavirus, that is something that is able to be paid. From the 6th of April, that was £6 a week, so that's to cover things like extra electricity, etc. If you buy items, though, and I know that many of us have had to start working from home when we've never done it before and perhaps didn't have the necessary equipment. Unfortunately, if the employee buys the items and you do as an employer agree to reimburse them, then actually that is a taxable amount and would need to be accounted for. Again, HMRC have said at least, though, you can include it in your pay-as-you-earn settlement agreement if you wish to do so. However, if the employer themselves ordered all the equipment and paid for it and sent it to the employee's address, then it wouldn't be taxable. So it is a little bit of a minefield there when you're covering costs for home workers, I'm afraid.
Yeah, understood. I mean, I think it is just to seek advice, if in doubt. Okay, next question. We furloughed some employees on the 14th of April. The furlough period lasts until the 31st of May. The April payroll will cover less than 21 days of furlough. Can we claim the full furlough period, even though the May payroll will not be run for several weeks? Steve, you want to?
Yeah, I can. Yeah. So I think we need to go back to the wording of that the expectation is you claim at or around when you're running that payroll. So I don't think that the spirit is there. I'm not sure it's specifically ruled out, but I don't think the spirit's in there to claim in advance.
Right. Okay.
When you're running your May payroll, you claim for May. When you're running your April payroll, you run for April. HMRC would be saying, well, you're not going to be paying people in advance, so you shouldn't be claiming in advance.
Yep, fine, understood. We had an employee who was made redundant as part of ongoing cost-cutting efforts, not directly related to COVID-19. Can we rehire, furlough, later terminate under the job retention scheme? Wow. Carolyn?
Yeah, I think that is one for me. So, yeah, the position is that employees who were employed as of the 28th of February and on the payroll, so they were notified to HMRC on the RTI submission on or before the 28th. Then they were made redundant or stopped working for the employer after that, and prior to the 19th of March, if they are rehired by the employer, those are the ones you can claim for. So the words we've got are made redundant or stopped working. It does appear, therefore, that they may well be able to be claimed for. It doesn't at that point state that made redundant relates only to the COVID infection problem. Maybe we'll get some more clarity.
Yeah, okay. Susan, you were mentioning about the loading of information onto the portal earlier. One of our guests has asked, can you choose to upload a file instead of manual input if you've got less than 100 employees?
That's a really interesting question, and at the moment we don't know. We were told you can only do it by entering them, but we have been requesting of HMRC the ability for people to upload if they have less than 100 to make it easier for people. So hopefully that functionality will be available, but currently we're told, unfortunately, if it's less than 100, they have to be manually inputted.
That seems pretty harsh if you've got 99 employees, doesn't it?
Yeah, well, it's a lot of checking of typing in data.
Yeah, I was about to pick up on that because I was about to say practically, I mean, this is a question that's come up quite a bit over the last 24 hours, but there's the kind of consideration of, well, it's likely to take longer to make a claim for a small employer than it is for a larger employer. And that's something that we've kind of seen, whether we're helping with a claim on behalf of the client or they're doing it themselves. It's kind of let's assume that you're just entering in header information and then uploading a file for 100 employees, but for 99 you've got to do all that typing and checking. It's likely to be counterintuitively a more laborious process for a small claim than it is a large claim.
Yeah, sure. And apologies if you covered this when I was busy looking through the questions. Will national insurance be calculated on the portal site?
We understand that HMRC are putting up a basic tool so that people can use that in order to do calculations. We don't know when that's going to be available, and actually indications are that that won't be available when the portals first open because it's still being developed. But if you are able to, you can calculate it and submit it if you don't need the tool, or you ask somebody else to help you with that.
Yeah, okay.
Just to add in there, I think it's saying the same thing as Susan, but it's just that the calculation tool at HMRC will be separate from the portal. So the portal itself won't be calculating any NI or anything. The expectation is that all the calcs have to be done before you then go onto the portal to do a claim.
Yeah, okay. Okay, all right, I'm just conscious of time. A couple more questions. If we take employees on a TUPE basis after the 19th of March, can these be claimed?
I can answer that from a pay-as-you-earn scheme point of view, but Carolyn might also want to chip in. From a scheme point of view, if the person was on a payroll previous to the 19th, and effectively you have what is called a succession for payroll terms, then they would be able to be, because in effect, whilst the employment pay-as-you-earn scheme might have changed, they are treated as though they're with the same employer.
Right, okay. Okay. Pension-related questions. So, Susan, whilst you're on, pension contributions, our minimum is 4% of basic rather than 3% of all pay, as we're on the auto enrolment rules. Can we claim the 4% of basic, as this is our legal obligation, surely?
No, it's very clear that HMRC have said it's the 3% contribution, and so if you are required under contract to pay more, then obviously that would be something that you would have to meet unless you change the contract terms, which I'm sure Carolyn can explain in more detail.
Yeah.
Okay.
Carolyn,
are you okay with that? Just quickly.
Yeah. Absolutely. I mean, we've already talked about the need, if you're going to change contract terms, to make sure that any changes are agreed with the employee. And therefore, the terms of the furlough agreement do become quite important, and many of these things were sadly not thought about because there were more important imperatives when furlough was started. So there may perhaps need to be some revisiting of any continuity of any furlough that is agreed between an employer and employee to try to accommodate some of these things that are now coming up.
Okay. Final question: if the pay rates for these calculations need to be as at the 28th of February, how is this affected if we've had a pay increase due to national minimum wage on the 1st of April?
I can just chip in there and say that the changes in relation to national minimum wage will only apply if somebody is working or if they are undertaking training. So that assists there. And just remember that mainly the calculation dates are now 19th of March.
Brilliant. Thank you. Look, we're 1 minute to 12, so I just want to draw this webinar to a close and thank our presenters for their efforts this morning. It is a fast-moving time. You can see everyone's details there on screen. If you've got any questions that you want to follow up with, please do contact our team or your normal RSM contact. These slides will be made available after the event. Also go to the coronavirus website on this address. If you just go to rsmuk.com, you should be able to find it, no trouble. Details of the proprietary software that we mentioned earlier will be made available shortly as well, because I know there's a few people that have expressed interest in that already. So I guess, and finally, just in terms of making sure we're keeping you fully informed of what you need to know, if you can go to the RSM UK site, put in your preferences, we'll make sure you're being updated with what is relevant to you in these fast-changing times. So thank you very much for your time and attention. I hope you found it of use. And on behalf of the RSM team, I wish you a good day. Thank you and good luck with your furlough claims. Thank you.